Ladies and gentlemen, what's going on? My name is Antoine, and this is GoVroom. In the last video, I talked about what I'm working on behind the scenes before buying my first car. And one topic kept coming up again and again: insurance. Not marketing, not cars, not revenue, screenshots, insurance. So today, I want to slow things down and do a real deep dive into how insurance actually works in the car rental space, especially for people starting on platforms like Turo and eventually transitioning into private rentals. This video is about how coverage really functions, what insurance companies actually care about, and how hosts qualify or disqualify themselves, what happens when the car isn't rented, and why insurance decisions quietly control the entire business. But before we get into all that, there's something important I need to say. This video is not legal advice, not insurance advice, not financial advice. I'm not acting as an insurance agent, broker, or attorney. I'm documenting my personal learning process as I build GoVroom and sharing publicly available information and my understanding of it. Insurance rules vary by states, policy differ by carrier. Coverage depends on exact facts and disclosures. If you're building a rental business, you should always read your own policies in full or speak with licensed professionals and confirm coverage in writing. This video is for educational and documentation purposes only. With that out of the way, let's talk about why insurance matters so much. Insurance is not a monthly expense, it's a control system. A lot of people treat insurance like a bill, something you pay so you can move on to the real work. That mindset is dangerous. Insurance is a gatekeeper. It decides what vehicles you're allowed to own, how those vehicles are allowed to be used, where they can operate, how quickly you can grow, and whether a single incident becomes a setback or a shutdown. In this business, insurance doesn't react to risk. It pre-approves or rejects it before anything happens. That's why the ideal of I'll buy the car first and figure insurance out later causes so many problems. Once the car is purchased, your leverage disappears. You're now trying to force insurance to fit a decision you already made, and insurance doesn't work that way. Another major misunderstanding is thinking there's just one kind of commercial insurance for rentals. There isn't. Your rental operations generally fall into three insurance environments. The first environment is traditional rental fleet insurance. This is where established rental companies live. These insurers expect multiple vehicles, defined locations, formal rental contracts, documented procedures, predictable operations. Coverage here can include auto liability, physical liability, or physical damage, less contingent liabilities, sometimes add-on products. This world is built for structure. If you don't already have systems, you don't get access. The second environment is specialty rental programs. Now, this is where many independent rental operators end up. These are MGAs and program administrators working with carriers behind the scenes. They focus heavily on territory, vehicle class, rental duration, documentation, quality, loss history. They're flexible but not casual. And then the third environment is platform-based car share protection. This is where platforms like Turo operate. This world is completely different. Coverage is event-based, meaning protection depends on whether the vehicle is actively on a platform trip. And this is where misunderstanding creates the most financial damage. Now, people often say Turo has insurance. That statement isn't wrong, but it's incomplete. Here's the accurate breakdown. When a vehicle is on an eligible Turo trip in the U.S., hosts receive up to $750,000 in third-party liability coverage, divided under a policy issued to Turo by Travelers Access and Surplus Lines Company. This coverage applies to bodily injury to other people, damage to other people's property. This is liability only. It does not cover damage to your vehicle. That distinction matters. This is where confusion sets in. In most U.S. states, Turo does not provide traditional insurance for physical damage to the host vehicle. Instead, hosts participate in a contractual reimbursement program tied to the protection plan they select. That means payment depends on compliance with platform rules, documentation, timing, and whether the trip qualifies. That this is not a personal auto policy. It's not a commercial auto policy. It's a reimbursement structure. Protection on Turo operates like a switch. When a trip is active, protection applies. When a trip ends, protection stops. There is no gray area. Activities outside the trip, even if related to hosting, fall outside that protection. That's why off-trip exposure is such a critical issue. Deductibles are a business decision. On Turo, higher earnings come with higher deductibles. Choosing a deductible is not about confidence, it's about cash flow tolerance. If you select a high deductible and damage occurs, that money comes directly from you before reimbursement begins. Insurance companies pay close attention to whether operators understand this because misunderstanding deductibles lead to poor claim behavior. Documentation isn't optional. Turo's system relies heavily on documentation, pre-trip photos, post-trip photos, timestamp, clear, complete. If damage occurs and documentation is weak or late, reimbursement becomes difficult or impossible. Insurance rewards consistency, not intention. Protection can be reduced or avoided by prohibited uses, unauthorized drivers, misreporting deadlines, missing photos, misrepresentation of vehicle use. Misrepresentation is especially serious if how the vehicle was actually used doesn't match how it was disclosed. Coverage can disappear. Here's the part most people underestimate. A significant amount of risk happens when the car is not rented. Cleaning, repositioning, maintenance, storage, downtime. The vehicle still exists, and because it exists, it still creates risk. Insurance refers to this as existence exposure. Off-trip coverage, especially with one car, this is where things get very real for new operators. Most traditional insurers do not want platform-based rentals, car sharing, single vehicle operations. That means options are limited, but not non-existent. Wrongly focuses on insurance designed around car sharing and platform needs. They may work with very small fleets, even single vehicle operators. In some cases, their focus is on off-trip exposure, storage, downtime. They typically require telematics or GPS tracking. Full disclosure, strict compliance with usage rules. This is not personal auto insurance. It's a structured, rules-based approach to rental risk. Tint operates in a similar space. Their programs are documentation heavy and compliance driven. Coverage depends on accurate disclosures, defined use cases, strictly adherence to policy terms. This type of solution works best for operators who are highly organized and system driven. Traditional commercial insurers, large carriers like Progressive, Commercial, or Travelers generally have little appetite for Turo, car sharing, single vehicle rental operations. Worse than being declined is being issued a policy that quietly excludes car sharing. That creates a false sense of security, and that's dangerous. Insurance companies don't just ask if you want coverage. They actually evaluate predictability, control, documentation, transparency, loss potential. They want to know whether the operation behaves like a system or like chaos. Predictable systems get approved. Uncontrolled risk gets declined. Because GoVroom is starting on Turo, my priorities right now are fully understanding trip-based protection, knowing exactly what voids coverage, planning for off-trip exposure, and building systems before vehicles are involved. I'm also working a full-time job. That means I don't have time to clean up mistakes later. Preparation is how I protect both time and capital. People ask why I haven't bought my first car yet. This is why. This business isn't about acquiring vehicles, it's about managing risk. Insurance decides what risk is acceptable, what risk is priced, and what risk is rejected. Once vehicles are involved, costs increase, stakes increase, and mistakes become expensive very quickly. So I'm choosing to slow down now so I'm not forced to stop later. This is GoVroom. From zero to launch, I'm documenting everything, including the parts most people skip. If you want a real founder journey, not a highlight reel, follow along. Next time I break down how insurance considerations directly influence which vehicle becomes my first purchase. follow the journey.